Good morning, everybody. Mike Tedeschi, investment strategist over at Perspective Wealth Planning. With this week's market recap video, we're going to take a look at the four major U.S. indexes. We're also going to take a look at gold, oil, as well as the emerging markets, and we'll take a look at some breadth readings here as well. So let's jump right into it. Not a whole lot has changed since we spoke last. Bulls were looking for us to make that new all-time high, and again, if they did, that target still stays up at the top end of that trend line around that 3,100 level, but subsequently were rejected and sold off. However, the market held right where it needed to on the 50-day moving average, but also this support line right here. It was resistance, it acted as support, it broke down, and then it acted as support once again right here. So really the market's still trapped in between that 2950 and that all-time high zone right there. Follow which direction it breaks. If you break the bottom end here, you're looking for a move back to the lower end of the channel, which is about that 2860 zone. If you break the top end, you're looking for that 3100 zone. The rest of the indexes, very similar look. The Nasdaq here, you can see same type of setup here. Really a wedge is forming where you've got higher lows and lower highs. So this should get resolved one way or the other sometime in the next couple of weeks as that coil really kind of tightens up, right? There's only so long it can trade in this zone before ultimately it makes a move either up or down. So we'll pay very close attention there. We take a look in at the Dow. Very similar to the S&P 500, flat top rejected, holding for the moment. The key support level on that shorter time frame right in there, hanging above that 50-day moving average. And we take a look at the Russell. Let me clear all these drawings off and get this a little bit cleaner for you because we've really analyzed that chart a lot. Right, we've got the resistance that's in there at that 1615 level, and then you've got that support zone that is back down here at that 1450 level, and it really has just been trading inside that range now for the entire year. It ran back up and failed right at July's highs right in here at that 1600 level. Pulled back, but where did it hold? Just like the rest of the indexes, it's holding that 50-day moving average in that shorter term support zone. So really watch the Russell underneath that 1520 zone. That would kind of target the bottom end of that range, and if it can hold right here, you see a move back up towards that 1600 level. We haven't taken a look at the emerging markets in a while, so let's jump in there. This was the last time that we really took a look at it. We talked about this support zone could potentially be a higher low if you go back and look. Since the beginning of the year. One of the other ways that you can take a look at this is it is also in a channel, but it is in a downward channel. And so we will show you that look right there, and that was the other reason why this zone right in here looked like it could be support. It made the bounce, tested the top end of that range, and now is hanging out once again right there at that 50-day moving average. So really no change there in the emerging markets as well. It's making lower highs and lower lows, so that is a downtrend. It's channeling, and it's inside of this support zone, which really the bottom end of that is about that 940 zone. So we'll continue to pay attention over there. We take a look at the U.S. dollar. The U.S. dollar yesterday, highest close since 2017. All right, you can see the areas that we talked about every time it got over that 99 level. It was swiftly rejected. Yesterday, it got up over that 99 level and has subsequently continued higher through to today. So if you can get a move up over that 99.35 zone, that really does give this really kind of an opening up to about that 101 level. Would really be that next level of resistance going back to 2017. So we'll pay very close attention. That, of course, will affect commodity pricing. Take a look at crude oil here. On the shock that we had a week or so ago, we had that huge move up about 15%. Subsequently, it has almost filled that gap completely now. That gap actually starts at 54.80 on the price of oil, but has given the entire move back. So bulls really were looking at this as, oh my goodness, all right, we got a shock, we got a breakout here in this downtrend line. Let's see if we can base for a little bit and continue to head higher. What they didn't want to see was just essentially straight selling off of that news, which is what has happened. Really a move underneath and a close underneath that 55 and 54 level really would bode negatively for the price of oil moving forward. Major support in at that 50 zone, and if we're looking at this just kind of in that horizontal range, really the top end of this is that spike high at 63.50 or so, and the bottom end is that 50 zone. So as long as you kind of stay in there, you're inside of that range and move above. Would target that 76, and a move below would target December's lows back there at 42. So we'll continue to pay attention. Last but not least, wanted to take a look at the Nasdaq Mccullen Summation Index breadth reading here. So we go back into to June. We had that tailwind come in, and then in August we actually tested that same zone right there. So that kind of support zone, and the market breadth did hold right there, and actually gave us that nice tailwind once again. Now, if we look at where that has failed, it's finally failed in the positive territory, but that 300 level there on the breadth reading is really what you want to see us back over if we really want to have another really strong push like we had at the beginning of this year. But right now, we've got that crossover that has taken place right there. So now we've got headwinds coming in here for the next couple of weeks, and of course we did see that play out in actual price here, as we've fallen over the last couple of sessions. So that that breadth reading there certainly over the last couple of sessions has flipped a little bit negative here. Market stabilizes right here. You can get another one of these moves like we had back in August and September, where it just kind of bases for a little bit before turning back up. However, if the market does kind of lose that zone, you're going to see this kind of pull back down, get back underneath that 0 zone, and that would not be good for the overall breadth readings for the market. So paying very close attention over there. As always, I hope you guys found this video useful, and I will see you guys next week. Take care.